Working very well for the pharma sector is how MNC pharmas have delivered earnings. So while domestic pharma has its own battles actually to face, it's really MNC pharma which is coming on top when it comes to their earnings performance. And a case in point there is GSK Pharma with their most recent reported numbers. In fact, Vaidheesh, who's Vice President South Asia and Managing Director India GSK Pharmaceuticals, is right here in the studios with us. Good of him to have taken out the time to be here to speak about the numbers in person. Now, Mr. Vaidheesh, good set of numbers. Let's start off with first, what your broad takeaway is in terms of the trends that you're observing for the business.
First and foremost, I think what was in the last year, I think we come out of it to a great extent. We are seeing good progress. As you can see from here, that even though we showed a very strong growth of 21% top line, but I wouldn't say all this because of our efforts. It's also because of the base effect. Because last year the GST, we had a reduced stock holding. So our underlying growth is about 11% on a focused business. So we are very happy with what we have done on the business that we are currently focusing on. So trend is good. I guess, I should be saying, but season is there, then we need to go and serve the patient. So currently that's a season of acute therapy. So
it is. And since you've talked about therapies, I want to talk about Augmentin, Synflorix, Calpol, Betnovate. They've delivered some very strong numbers. Will they continue to be the growth drivers for you?
I think that's a good question, because these are all real, what I call it, the strong horse for GSK for many years. One of the reasons that's showing a good growth is mainly because of the fact that we have decided to focus and reduce complexity in our company, and what we call put the energy where it matters. So that's one of the reasons why we are seeing strong double-digit growth for some of these old brands. You may call that as the old brand, but they still...
Yeah, some of them are household names. I mean, Betnovate and Augmentin, they are such familiar names in any case. So they will continue to be the leaders.
Absolutely. That's our focus, and we don't want to spread our resources to multiple things. In fact, we have reduced the number of brands that now we promote. Typically what happens is that you tend to get cluttered with multiple brands, and that takes away your efforts and resources of the company. So one of our strategies that we have taken is to simplify, put all resources, rather than getting diluted efforts on multiple brands. So far it's working, and we think that it will continue, because still there are a lot of patients who need to be served. Underpenetrated market. So we do believe that still there is a big opportunity for us.
But so you're saying that more than 90% of your revenues will still come in from the acute therapy business, that you would not diversify?
Well, that's our current focus. Acute is primarily, our focus is on respiratory. And in respiratory, we have never invested in India in the past, but right now we are investing. We have a product called Steritide, AQLR. And we are also going to bring in some IP products from our parent company. We have got a marketing approval for a very tough asthmatic condition. There is a biologics. Hopefully, we should be in a position to launch this product by April or May next year.
Okay. Would you say that, some of the big events, or I should say circumstances, which were really dominating and influencing in pharma, there was the price control, there was demonetization, there was GST, which has impacted you as well in the quarter. Are those adjustments now behind you? Can the industry now move forward?
I think so, because as I call it, the perfect storm that happened at a point of time, right? Everything happened at a similar time in the last 2 years. So we do believe that behind us, unless we don't expect anything else to come in. As of today, I would say we don't have any more clouds hanging out there. I think the government do understand the pharma industry's need, and enough has been done. And there's a good support we are also getting from regulatory bodies for the pharma industry. I see a positive direction for India. Growth to continue to be at a 10 to 12% kind of growth for the industry.
This new vaccine that you've launched, Infarix Hexa, give us more details about the response here, and what do you hope to garner in terms of revenue and profits from this one?
Yeah, this is one of our terrific launches. This is much awaited launch. This is a 6 vaccine, 1 launches, so that the mothers don't need to carry the children multiple times to get these vaccines done. So
Yeah.
in one shot, and it's also not that expensive, and so we've got a fantastic response. Pediatricians are very happy with that we managed to bring it into India.
Excellent.
We see a strong prospect for this brand.
How much contribution to revenues do you
For the
target
vaccine
from-
business, this should contribute at least 15-20%.
On what margins does this vaccine come at?
Margins are in and around this, similar as what we are delivering right
So
now.
19%, roughly
around,
19-20%.
yeah.
Okay.
I want to talk about your Vemgal plant as well, which is now nearing completion. Tell us a little bit more about the timelines, the kind of capacities, that we can see transpire out of that plant. How meaningful is this going to be?
Yeah, so we are one of the few companies who invested almost 1,100 crores in a greenfield manufacturing. See, we do believe that the volumes are, in India, it's all about scale. If you don't have a scale, it's going to be tough. So we do believe there are many patients who need to get our medicine. So we are looking at 8 billion tablets and 1 billion capsule. So that's the level of capacity that we are creating. So we believe by 2023, this capacity is going to get fully utilized. So this is one of the, what I would say, the last 14 years, our PLC have not invested any other greenfield. So this is the first after 14 years in the world. So this is a kind of a state of art, fully automated. And we do propose to manufacture some of our fast moving brands out there. So this will definitely bring high quality, where quality is assured from our control. Supply chain assurance that we can give. So we are pretty happy with September 19 is what we are expecting, the first commercial production. The stability batches are already going through, they're starting now. So it will take about 7 to 8 months before we start rolling out.
So with that kind of high capex and the kind of size that you're looking at scaling this plant to, what kind of revenue contribution, just a ballpark percentage if you could give us as an overall revenue pie, could we see come out of this plant?
No, see, as I told you, for us to grow at about 10 to 12% minimum growth, you require that volume. Right now, we are one of the largest volume player in India across all companies, only few companies above us. So for us to grow even at 12 to 13%, we need that kind of volume. We can't rely on CMOs to produce that volume. So if we continue to grow at about a little faster than the market, this capacity will help us to meet those goals.
No, but I think what we're trying to understand is how do you cover the costs that you've made in terms of the investments that have gone into this plant and your ROI on the plant, because that would be a key contributor. I mean, at the end of the day, it's really about cash flows, right?
Absolutely.
So how do you map that?
So actually, from a cash flow point of view, we have already committed to those cash flows. So it's already more or less 90% is done. From a break-even point of view, we are looking at somewhere around 2024, 2025. We should be over with the effect of this plant on our cost structures.
Okay.
So, and also the
And is
cost
there an ROI that you're hoping to achieve?
Yeah, so once we get a break even, then automatically it starts paying back into our P&L.
I know, but what kind of payouts are you expecting? I'm sure that you must have done a net present value of future revenues coming in from the plant.
So net present value, we are expecting a good return to come only around 2025, 2026.
Okay, okay.
Yeah,
I just wanted to, so MNC, and we were having this discussion a few days back while we've asked you about specifics. I want to understand how is MNC Pharma kind of battling it out with domestic pharma, especially in the generics business. Some of your products are in the generics market. Domestic pharma is battling out issues with the US FDA. I think things are ironing out there. Is there a better sense on how you can garner more market share at a time like this where this transition is happening?
Well, I'm not sure as far as Indian domestic market is concerned, it will continue to have its potential. As I told you, it will continue to grow at 10 to 12. You still have, like for example, National Health Protection Scheme announced by the government. That's going to open up another set of huge opportunities for many Indian companies and also for multinational companies, for many of the branded generic. So I think we need to segregate the domestic and the international, because the international or the US market, Western market is a very different ball game. The way in which you get your approvals and the kind of pricing pressure you get from authorities there, I'm not competent to make a comment on whether it's going to be a pressure for Indian companies or not. But I would say, considering the fact we are 35% of generic supplier to US, if at all any temporary setback, in my personal opinion is that I think Indian companies will get over it. I don't see a challenge personally.
I have to ask you this. How is it that your global parent is viewing the Indian pharma market after the price caps, GST, you know, so many things happening in just the last 2 years? Are they willing to invest more on high price launches?
Well, you know, as you know, the GSK as a company has been in India for 93 years. So I don't think
older than some of the domestic companies. Yes, I know.
So 93 years, they've seen ups and downs of various aspects, political stuff that has happened. I think GSK has been long on India. And of course, price cuts, it does pose a challenge because suddenly your profitability, even the manufacturing location, investment that we have made, it has had an impact on our payback. But very important thing is that I think there is a huge trust in India. And as you know that 1,100 crores, then I'm going to invest in our Nashik manufacturing plant. Another approximately about 250 crores, and also we are expanding our field force and reallocating our back-end resources and putting into the front-end resources. So in this year, we are going to add more people,
which is very encouraging to hear.
So the answer to your question is that if the parent company is
they weren't that bullish, they wouldn't expand.
They are bullish about, means at least they feel confident that we are here to deliver that.
Final question from my side, on the innovation aspect of things, are you looking at setting up an innovation center in India? Is that because of the low cost model? I mean, we've seen that with some of the other companies. Is that the way forward? Aside of, you know, selling branded generics, would you also look into R&D?
Well, see, as you know, that pharma drug discovery is a very big process. You know, you can't put it into multiple centers. There's one big center. What GSK is looking at it is that utilize some of the scientific resources for our back-end operation in Bangalore. There's a good amount of recruitment that's happening to support R&D efforts, but not necessarily in the drug discovery per se, but there is a sub-component of the drug discovery. GSK is considering investing in India, and particularly in Bangalore.
Okay, just one final question. Your margins for calendar year 12 were at 31%. Now you're quoting in the range of 18 to 20%. Is the worst behind you? Can you better this 18-20% range?
In fact, I have made this point even previous call also is our aim is to get back into about 20, 21, 22 kind of range. And last quarter also we were at 21, even this quarter, and we expect our margins to improve. There's a huge amount of efficiency improvement that we are doing right now in the company. As I told you, putting the energy where it matters. So we are very, very confident that we'll be upwards of 20.
That optimism will, I think, spell well for your investors as well. Thanks very much, Mr. Vaidheesh, for taking out the time and being in our studios this morning.
Thank you very much.
Thanks.